thing you must do during a financial crisis is recognize that a crisis is underway. Very clear message for you right now, which is that this time is different, and it feels as though there's a lot of evidence to suggest that this Fed crisis is only just beginning.
Holy shit, what a week. So much has happened. Banks collapsing, the Federal Reserve in crisis, and Bitcoin living up to its promise and pumping. For us to understand where we are, we need to understand how we got here. Over to Mark Moss to get this show on the road.
Just to kind of run you through this real quick, 2008, they dropped rates to zero, put a whole bunch of money into the system. Inflation started raging. In about 2016, 18, 19, they started raising rates, and then the whole system crashed. So they had to lower rates. Of course, they blamed it on the pandemic, but the banking system actually seized up September 2019. They had to put 50 billion in overnight, then it was 75 billion, then 100 billion, then 200 billion. And by February of 2020, they were putting in $1 trillion a night to keep the system from going. And they were forced to lower rates. They kept them way too low for way too long. And they said, inflation's just transitory, it's gonna go away.
I just wanna start, do you know how much a dollar that you held at the start of the Biden administration in January 2021 is worth today?
Well, we've had inflation and it's declined in its purchasing power.
It's worth 87 cents.
Finally, they said, okay, it's a big problem, we better do something. This time they rose rates at a faster pace than any time in history. From this 2020 pandemic stimulus between the Fed and the government, they put in about $11 trillion. Now, where does that $11 trillion go? Well, it goes out into the banking system. The banks' balances swelled, and where do they put that? Well, they put it into treasuries, bonds. The problem is that they put them into bonds when bond yields were at their lowest level because the Fed had lowered the rates. So they put all that money into bonds. As soon as the Fed started to raise the rates, the banks were losing money on those government bonds, but it was unrealized losses. Remember, you don't have a loss until you sell, and they weren't forced to sell. A run on the bank happened, meaning people went and wanted to get their money out of the bank, and they were forced to sell their bonds, this time at a loss. They had to actually realize the loss. I'm here to say that we are having a financial crisis right now. They have raised rates with reckless abandon, faster than any time in history. The Fed is now broke.
And if you thought Silicon Valley Bank was bad, the Fed is sitting on unrealized losses of $1.253 trillion on their $8.3 trillion bond portfolio.
The Fed's a bank, and they're broke. The U.S. Treasury, the government, is broke. The interest rates have gone up so fast they can't afford to pay the interest on the debt. At the same time, tax receipts are plunging.
You look at the balance sheets of the banks, virtually none of them are sitting on enough cash to back demand deposits that can be withdrawn at the speed of minutes now.
Is that the U.S. banking system induced the Fed to expand its balance sheet and inject $440 billion of reserves in just 1 week. Essentially what they're saying is, they injected in 1 week 1/3 of everything that they've reduced the balance sheet by, right? A little bit over $1 trillion in a year.
So first of all, $2 trillion, what does that mean to the market? The reason we introduced the whole Fed, the money printing, the not QE, which really is QE, it's adding liquidity to the system, and $2 trillion is a lot of funds being entered into the system. Also, everybody is borrowing from the Fed directly.
They've also started to inject liquidity. Of course, they have to. The banks are collapsing. Now, that's what the Fed really cares about. When they said that they're going to raise rates until something breaks, it's when the liquidity dries up. And so liquidity dried up, the banks are feeling the Fed has to start injecting liquidity, and they're expanding the balance sheet.
Now, 2/3 of the QT, that is the quantitative tightening measures that they started in 2022, 2/3 has now been undone.
Right. So what is your plan to keep large depositors from moving their funds out of community banks into the big banks?
Look, I mean, that's certainly not something that we're encouraging.
That is happening.
That is happening because depositors are concerned about the bank failures that have happened.
No, it's happening because you're fully insured no matter what the amount is. If you're in a big bank, you're not fully insured if you're in a community bank.
Well, you're not fully insured.
Like, what? All she had to say was that if there's a systemic risk, we're going to take care of depositors. She should have known so well that this question was coming, and her inability to answer it and ultimately going, "You're not insured," is almost throwing gasoline on the fire here.
You have the FDIC deposit insurance fund of 128 billion. 128 billion and you're 18 trillion.
They are working on a way to find out how the Fed can guarantee all the deposits in the banking system. It's about $18 trillion. Now, to put this into comparison, remember when the global financial crash happened in 2008, the banking crisis happened, the Fed had to step in with 700 billion. Now they're talking about $18 trillion.
Not sure how the Fed can hike when it's handing out dollars to its peers, aka we're giving out money, we're gonna make sure that this banking crisis is contained. Well, what happened last time they contained a crisis with just free money? This happened. We went from about $5,000 BTC up to $69,000, roughly thereabout. Let's just make it easy math and call it a 14x. We have here the Fed's own recession model predicting the highest odds of recession in 30 years. So how exactly is the Fed going to keep making things harder on the economy? They simply cannot. They'll force a recession and then they'll have to fix that too. And what tool, pray tell, do you think that they're going to use to fix that recession, to fix this banking crisis, to fix anything? It's going to be the same tool.
What happens if they have to backstop $18 trillion? Well, if you guessed massive inflation, then you would be right. If you guessed destroying the currency, then yes, you would be right.
Central banks commit to unlimited liquidity. Unlimited. There's no cap here to provide cash in whatever amount to the banking system. That's incredible.
Video of Neel Kashkari, one of the Federal Reserve presidents, who he said on 60 Minutes that the money they have at the Federal Reserve is infinite. Let's listen in.
There is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system.
You see, the banking system in general is falling apart. It's falling apart predictably so because it's always been a Ponzi scheme.
Bail out the financial system with their infinite money, cause inflation to run wild, or stay the course, leave these failed institutions to collapse and watch as fires continue to ignite everywhere. Do they even have a way out? Or have they got something waiting for just the right crisis?
You and I realize that in a credit freeze kind of a situation, the only thing that it would actually allow you to transact would be some actual currency in your pocket. But if we go to, and this is where we are going, to a completely digital system, you're dead. You're dead in the water. That's what this is all leading to, this meltdown of the banking system, the financial system, and the economy, of course.
And so some want to increase power to these organizations such as the Federal Reserve. And so last year, President Biden issued an executive order to explore the creation of a U.S. central bank digital currency. And this is different than things like cryptocurrency, Bitcoin, and it provides the government with a direct view of all consumer activities. But as we've come to learn, any way they can get into society to exercise their agenda, they will do it. So what the central bank digital currency is all about is surveilling Americans and controlling behavior. The People's Bank of China uses its central bank to monitor citizen behavior, allowing for the surveillance of spending habits and to cut off access to goods and services. And I don't even need to think here, what are they going to want to do? These ESG factors. You go and buy gasoline. If you bought too much gasoline, they just won't allow you to use this to make a transaction. Who knows whether they would let you buy a firearm or things that they disapprove of.
So they don't like blockchain, they do not like Bitcoin, they have to bring out their own, is what they're saying here, a CBDC. The main economic attributes of a technically effective currency rest on three functions: as a unit of account, as a store of value, and as a medium of exchange. However, there is a fourth function of money as a means of social control. This is not the Chinese Communist Party we're reading through here. This is directly from the Federal Reserve.
Every government is at some stage in its development of a CBDC, central bank digital currency. Here in the UK, we have the digital pound. Governments are desperate to control how we spend our money because in doing so, they're able to manipulate the levers of economies. Let's say inflation figures are rising due to huge demand for a certain asset. Governments could programmatically limit individuals spending on that asset, thereby reducing demand, which would lower prices and bring inflation down.
The bigger thing that we have going on, and this is something I've been talking about, I really started hammering when the truckers' protest in Canada got shut down. I really then pounded the table when Russia had its bank account seized. And what we're really witnessing is a loss of trust. You've heard me talk about this a lot. It takes a lifetime to build up a reputation of trust. It takes one time to ruin it. And what we're witnessing is a loss of trust in banking. The Canadian truckers found out that their money in the bank wasn't theirs. They could lose it at any time. Russia, one of 3 global superpowers with nuclear weapons, found out that their money in the bank wasn't safe.
The US has used its monopoly as the reserve currency to strong-arm and bully nations, removing access to dollars in a world where important commodities like oil are traded solely with the greenback. But this monopoly is likely coming to an end.
Bad policies are turning your worst enemies into friends, and the US dollar-dominated system is the weapon that the United States overused. Sanctions are bringing countries together, an anti-US coalition that is starting to look very frightening.
If you are on the wrong side of the on the Western ideology, then you get sanctioned, you get kicked out of SWIFT. And the weaponizing of the dollar, I think, is what has accelerated the union of all of these countries. This is why I believe they will use the rails of the Chinese digital yuan for all of these countries to pledge to a new currency that will be a digital currency, but showing the immutability and the veracity of what every country pledges to the new system on a distributed ledger.
Brazil, Russia, India, China, and South Africa debates expansion as Iran and Saudi Arabia seek entry. Petrodollars are US dollars paid to an oil exporting country. Petrodollars are the primary source of revenue for many OPEC members and other oil exporters. Oil exporters settle sales in United States dollars because a dollar is the most widely used currency. Saudi Arabia considers accepting yuan instead of dollars for Chinese oil sales. Many things would obviously happen if America loses the petrodollar. Obviously America would be stuck with lots of extra dollars that are in circulation that would no longer be in demand. Those dollars would quickly return to the United States, which could potentially lead to massive inflation.
Check this out. The biggest holders of US dollar debt. I've highlighted the BRICS nations here.
Think about the world that is interacting with Bitcoin today. We have a world where the US dollar is losing its hegemony. You have countries who are deciding between, do I want to stick with the US dollar or do I want to go with the communist China regime? Those are my 2 options, right? Doesn't Bitcoin, being this third apolitical Switzerland type option for a global currency, already show its value?
We're looking at best of breed that's really taking off. And what that tells us is that there is money in the financial system that trusts Bitcoin and Ethereum enough to go there for safety. The reason why the market, the stock market's decoupled and Bitcoin is going up while the stock market's going down is because of this financial turmoil. People are consciously making the decision that they want to take their money out of the fiat system and put it into the crypto markets. And I think that's fantastic.
6 days ago, Bitcoin was ranked number 27 on this list. Today, it's ranked number 22. That is a stunning development, going up 5 spots in just 6 days.
Bitcoin has absolutely shone this week. This situation is exactly why Bitcoin was created. It's even written into the code. The Genesis block had this message embedded into it. The cryptoverse has been all riled up this week when the former CTO of Coinbase, Balaji Srinivasan, nailed it, bet that 1 Bitcoin would reach $1 million in 90 days.
It all began with a guy called James Medlock. I'll bet anyone $1 million that the US does not enter hyperinflation. And Balaji jumps in yesterday. I'll take that bet. You buy 1 Bitcoin, I will send $1 million US.
But can Bitcoin go to 1 million? Yes, absolutely. in fact, there are only two outcomes here, guys. Either this Bitcoin experiment fails in the end and it goes to practically zero, or it will at some point go to $1 million. Fiat will continue to become less and less worth per fiat dollar.
As the week went on, it became apparent that he made the bet in an effort to raise awareness to the risk of hyperinflation.
But what are the causes? This is uncanny. The causes of hyperinflation, and let me know below if you think any exist today, or all of them, or some of them.
There is no doubt in my mind that Bitcoin will reach $1 million. But as James shows us in this model, if inflation and money printing continues, 1 million may only be worth 167,000 in today's value. James went on to illustrate just how hard an asset Bitcoin is.
Luck here, you have 1.7 million left to be mined, 20 million total supply, approximately 16 million less 5 was lost, and there's only 1.9 million available for purchase on exchanges.
There is no other asset of the same rarity as Bitcoin. Check out this interview with Jack Mauler, the CEO of Strike.
If silver's gonna 1000x, I will walk into my kitchen right now, I will melt all my silverware and I will sell it at market. If gold is gonna rally, Elon Musk will find more on Mars. Bitcoin is, this is a super important point, Bitcoin is the only monetary instrument in the history of our species that is fixed. It does not matter how much more demand comes into the asset class, Kelly, no one will ever be able to make more of it. There are two things I can guarantee you in my life. One, that I'll die, and the other, that there will only ever be 21 million Bitcoin. And those are what's the two things that I can only value as my life and my Bitcoin.
Explain to me one thing. Why is the supply fixed?
It's because it's written in the software and the software is distributed. There is no one person to ask. There is no one person to trust. No, it's decentralized so that the defendants of the monetary policy are distributed, is so that it's a network of computers that actually defend the policy and instrumentation of the monetary asset.
Why couldn't the software be rewritten?
Someone said, I want to change the rules of Bitcoin. I may want to create more of a supply. I may want to make it faster. I may want to make it do a backflip. And they created it, and they created new rules, and they called it Bitcoin Cash. It's a different asset. It's a different instrument. And when someone tries to pay me in it, my software rules that I run in my home in a room over there says, nope, that's invalid.
What Jack is saying is that to change the properties of Bitcoin, you would have to change the code. In doing so, you create a completely new asset, which is no longer Bitcoin. And this new asset cannot interact with the original chain. That's because the code is distributed, and the distributed network will not accept this new mutant code. Now for a few interesting charts brought to us by our council.
This is a logarithmic growth curve for Bitcoin with some nice colors laid on top of it for fun. You can see the first 3 Bitcoin peaks ended in the red zone. The previous bull market top in 2021 didn't actually rally into the red zone. It only reached up to the orange zones. Again, we're seeing the idea of potentially diminishing returns per cycle. If the next peak only hits the orange bands, then it gives us a potential price of around $150,000 as well. Now for the hopium addicts out there, the top of the band in early 2025 is at $350,000. Very nice.
This is a Bitcoin chart starting in 2012, going to today, 2023. But it is reverse.
Yeah, so price target wise, I think ultimately I am on the downside here. I think as long as we are still up against this line, we have to respect it. So I'm looking for a pullback to the lower end of that channel, which is around the 20,000 level. For me to be bullish overall and think a low is in on crypto and this isn't a bear market rally, we would actually have to establish ourselves back above 30,000.
So the total stablecoin market cap, $133 billion, down 1.47% over the previous 7 days. So a little bit of bearishness along with the bullishness due to the fact, of course, there's no new inflows into the market right now. It does seem that it's just potentially sidelined investors among us who are just getting back into the market, which is pumping up the prices. So not new fresh money in. Bitcoin dominance tick up yet again, now up to around 47%. If we do look past data here, July, then a spike here October, and again May 2022. Throughout these periods over the last 2 years, Bitcoin has come and tagged this kind of area, somewhere in the 47 to 48.5% region for Bitcoin dominance, before having a bit of a sell-off there, sell-off there, sell-off there. So if history is to repeat, maybe Bitcoin comes a bit higher this time because it has a very strong narrative, but the sell-off that follows would result in some form of an alt season.
First, they ignore you. Then they laugh at you. Then they fight you. Then you win. Right now, we're in the fight.
And more chokes to come. This from Balaji Srinivasan warns that the US government will cut off access to Bitcoin as banking crisis deepens.
Binance is reportedly ending and halting deposits and withdrawals for customers in the UK.
They're trying to block the exits. We're seeing this from the SEC's action, the subpoenas that have been going out. They're trying to stop people from leaving the financial system and going to the alternate financial system, Bitcoin and cryptocurrency. The FDIC is weaponizing recent instability in the banking sector to purge legal crypto activity from the US. This is with effectively Signature Bank, Silvergate, and Silicon Valley Bank being taken out the back and shot by the Fed.
The Fed was going to try to choke off all the exits. So the ship that you're on is going down, and they want to block off the exits so you can't get into the life raft. That's kind of what we're seeing. What we're seeing is that these crypto adjacent banks, these banks that have been friendly to cryptocurrency, which of course is a way to get out of the financial system, a parallel system, if you will, and they've been taking these down. Now, these banks don't just go down on their own. Typically, there's some sort of catalyst, and so it's just coincidental these happen to be crypto adjacent banks.
Do not think for a second that their little monopoly deal or their ability to print out of thin air is going to be taken away. Hey, what if it becomes illegal? What if of all these laws that they're getting ready because they have a CBDC, it's ready to go, and they won't allow anyone to stop it? And I know you guys are like, well, they won't come for my private keys, they won't come for my gold, they won't come for my silver. Guys, it's the government. They do, they will, and until you've gone through it, you're like, they won't lock me down. US accused of trying to quietly ban Bitcoin, Ethereum, and crypto.
The beauty of Bitcoin is it's hard to cut off, and the more you try to cut it off, it's like a cockroach. It just spreads and it becomes more popular.
So, buckle up. It's about to get messy, but we all know what comes next. Thank you so much for tuning in to this first episode of TLDR Crypto. If you liked what you saw, please subscribe and hit that bell notification, and do check out all of the influencers that we've used in this video. Until next week.